All right, this one's kind of tongue in cheek, but people always ask me, why do banks suck so bad and decline so many loans? Well, there are two main reasons why they suck so bad, and almost no one is going to tell you these things. Promise you. They try to keep it a secret, but I'm going to tell you. And the second one is something that no one outside the industry actually realizes. But first, make sure you subscribe if you want insider info on business and investing from a straight talker who has over 2 decades of business and legal experience. All right, number one, I hate to say it, but it's true, they're dinosaurs. And there are so many people working at banks that are just very average and they hate their lives. It's true. Now, some are, of course, better than others, and there's always exceptions to the rule. I've known some very smart bankers in the past. I've known some very smart executives who are great people. But the vast majority of people you're going to find in the banking industry are going to be people who are not really the best. And I'm going to get a lot of hate for this, but it's true. If you want an exciting career and you're a go-getter, there's just not that many people going into banking anymore. Now, some banks are getting better about this, but a lot of the smaller banks and the community banks that I like the best, you're going to go look at their executive team and you are going to see dinosaurs. These are super old people who are not in touch with the reality around them, and they're making decisions like it's 1965. Doesn't work anymore. You're also going to find banks with data technology. They seem scared to take a risk when it comes to systems. And I totally get it and it makes sense. It's because it's so expensive for banks to change their core systems. So they tend to hang on to the legacy systems and try to make them work for years and years, even though those are expensive and don't provide the best experience for their customers. But it's just an old industry. It's a necessity. We need banks as an intermediary. And so I'm not against banks, but I think within the next 20 years or so, you're going to see a lot of younger people moving up to the executive teams. You're going to see a lot of younger board of directors, and things are going to improve. You're going to have banks that are not afraid of technology. They're not afraid to take a little bit of risk. The downside to all this is that when you have a lot of people working for an organization that are very average, you're less likely to find somebody who's a go-getter, who's going to make sure that your business gets what they deserve and they get the help that they need. So it just means you're going to have to do a little bit more shopping around to find one that is a good fit, to find a bank that is on the forefront, and to find bankers that work there who are going to be the go-getters that your business needs. And you can find them. They're out there. But I really think the vast majority are not that great, unfortunately. All right, the second reason why banks suck and decline loans is that they are not structured in a way that allows them to take a material amount of risk. Let me explain. If you had several investment options, but you knew that your return was only going to be about 1%, would you be willing to take a lot of risk? And the answer is no, right? Are you going to go invest in Bitcoin if you know for sure that the most you can possibly earn is 1%? I don't think you would. I think you're going to go to a savings account that's going to give you a rate of return that is going to be safer, that you know that return will happen no matter what. And that's what people don't realize about banks. If you look at their return on assets, it means all of the purchases they've made and all the things that they own, all of their assets. Most banks are only earning a little over 1% on those assets. Okay, so if you're only earning a little over 1% in your rate of return, you're not going to want to take a lot of risk. And so banks like everything to fit into a nice and neat bucket where they know exactly what to expect and the risk is minimized in every way. And if you have a larger business loan or a larger business and you deal with banks, you know that they put things called covenants on your loans. And there's other things as well. They do everything they can to try to make the risk of default as small as possible. And then there's always collateral, usually there to back things up if it goes south. Now, there's other ways to measure rates of return, of course. But my point is, the return that a bank earns is so low that you're never going to get them, almost never, depending on what bank you're at. Most of them are not going to finance something that appears risky. They're not going to want to finance a startup with some wild projections when they know that they're only going to earn such a small amount. You've got equity in the business. If it takes off, you're going to skyrocket and you're going to become very wealthy. The bank is still going to earn their measly percentage, right? I know what you're going to say. The interest rate on these loans is higher, so that's what they earn, but that's not right, okay? They might earn 4, 5, 6% or more on the loan that they make to you, but by the time they cover all of their other expenses and overhead and their cost of funds, it's so low that it's just not high enough for them to take risk. If you think that you've got a loan that's a little bit riskier, or you're in an industry that's a little bit riskier, you want to go somewhere that specializes in what you do. And they're out there. They're few and far between, I know, but go on Google, look around. You can find a lender that specializes in what you do, and they're going to be the best one to go to that's going to help you out and make sure you have your highest chance of success. But let me know what questions you have. Happy to help if I can. And as always, I wish you success.